everyone. It is Evan here from the Trade Risk on Friday, November 23rd, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So probably be a little bit shorter on this video. It was, of course, the holiday shortened week. Markets half day today on Friday, which is allowing me to get this video out a little bit earlier. And quite frankly, not a lot has changed from the recap that we did just Tuesday, just 2 days ago, or really a day and a half ago. Markets are still kind of in this tough spot. Levels are pretty much the same that we talked about just a few days ago. So I'm going to move through this fairly quick, but let's start off looking at our dashboard here, and you can see it's been a real tough stretch of performance over the past week or so for really across the market, across multiple assets. But when we look here at the Dow, S&P, Russell, the Qs, everything over the past 5 days down anywhere from 2.5 to 5% for the NASDAQ 100. Today's change on Friday was a short day, of course, but we were red right across the board, and we're below the 1050 200 SMA in all of the major averages, and we're below last week's lows in all of the major averages. So not really much to hang your hat on there if you are bullish on the market. We are stretched, of course, to the downside, but doesn't mean we can't get more stretched. When we look down here at sectors, really everything, even utilities, just managing to barely hold green over the past 5 days, but all the way across the board down to technology, discretionary, semiconductors down an average of about 5%. So some pretty ugly action out there. And across all the major markets, it's commodities, volatility products, bonds, gold. That's what's hanging positive. And then down here you have just a lot of risk assets that are just getting hit over the past week or so. So let's jump into the charts now. Let's take a look at some of these levels. This is the S&P 500 here. And we can see down 3.79% on the week. You can see we did take out last week's lows. We were very much approaching the lows that we made back at the beginning of November, at the start of the month, where we saw this nice reversal here. We had that led to a nice 2-week bounce, and now we're coming back down into these lows. When we look at the structure here on the weekly chart, not much has changed. We're still just in a ugly pattern, quite frankly. It's a sideways channel that I'm still looking at, 25.33, 28.72 to the upside. Wouldn't still be surprised to see us come back down and retest the year-to-date lows at some point. Doesn't mean we have to get down there, but still just would not surprise me to just see if these lows are good. We are still below this trend line that broke back here on the 12th of October. We retested it, we failed, and now again we're coming back down to this area. One final comment I'll make about the S&P 500 on the longer term time frame is this is going to be a important area all the way down to, call it down to the year-to-date lows, but when you start getting into this 2600 area, take a look at all of the tails. This is where past buyers showed up. So back in February, look at this tail up here that drove prices higher. We had this tail here in April, right up in here, these two bars week to week, right above 2600. That is where we saw reversals. That is where we saw the selling dry up, buyers take back control. Just 2 weeks ago, 3 weeks ago, back in November, we saw this long tail again. So as price starts to get back into around this 2600 area, if you're bullish, if you're constructive on the market, or if you want to see this market start to catch its footing, this is going to be a good spot to hold all the way down to the year-to-date lows. So essentially the next 3 to 4% in the S&P 500 on the downside. That is where you're going to really want to see and look for clues if buyers are going to step back up here again. Otherwise, it's looks pretty bleak for the bull case. We look here on the MACD on the weekly chart. Take a look at it. It is making new lows here. So momentum still kind of building to the downside. That is also a strike against the bull case right now. When we go to the daily chart, we've talked about the daily positive divergences here, and this is where it's really important to understand where you live as a trader or an investor, or how you approach the markets, because the fractal nature here is going to be very important. We do have some positive divergence brewing across all of the major averages, a lot of individual stocks. As we come back down and retest these lows, in some cases undercut the lows, we're seeing positive divergence in the MACD on the daily chart. When we look at the weekly chart, and again, I have an adjusted MACD setting, so keep that that in mind. But we look here at the MACD on the weekly, we are making new lows as we still have not yet taken out the lows here from the 1st of November. So really, have to pay attention and have to kind of absorb all the information here across the different time frames. Based on your strategy, that'll mean different things. I'm pointing it out here for you to sort of interpret and to kind of play with that as you wish. But when we look here on the daily chart for the S&P 500 now, you can see we went out at the lows of the week. So again, fairly bearish development there. It was a short week, but you can see we're almost back to, in fact, made new closing lows here for all of this recent action. So this was the lowest S&P 500 close since we started to pull back in October. We didn't take out the new low intraday. We still have the low intraday all the way down to 2,600, but for a closing low, that is where we are. We noted the positive divergence here. If you're bullish, this is where you're going to want to see buyers step in here. We had that nice end of day pop or end of week pop last week. If you recall, we sold off for the first 3 quarters of the week. We saw the reversal last Thursday. We saw our little follow through on Friday. It was enough for certainly even for me to jump in there and take a stab on the long side. And of course, that just completely gave way. That 2,700 area failed, and now we're seeing the sort of repercussions of that. We're starting to head back down and test these lows. So it'll be interesting to see if again we can find some support here, if we can undercut it, reverse, and find some support where the market has found the structure back here around 2,600 earlier in the year. If we go to the IWM, this here on the relative performance basis is trying to hold up here. Again, you can see the MACD positive divergence. We're not quite breaking back below the lows made in late October here, early November, around 144 and change. So again, this is going to be a good area, important area to hold. Divergence here looks a little more constructive for the IWM. So if we do see some type of undercut and reversal, might be interesting if you're short term, if you're tactical. But for now, still in this kind of cool, calm, collected downtrend here over the past couple of weeks. Be paying attention to that 145 area again for those support potential buys there if that's your cup of tea. On the NASDAQ 100, this is now the most pessimistic in my opinion, as we still hold up below now the lows here from the 29th of October. We broke down below it. We still have minor positive divergence there, but we are below that price right now. So until and if we can start to reclaim this level, if we see some type of high volume move and rotation next week above 162 or so, maybe that'll get me interested or looks more interesting for a shorter term tactical reversal here back up into this range. But for now, got to be suspect here for the NASDAQ 100. Let's move into some of the other major markets now. We got TLT, which has been grinding higher here in the short term. We've got this nice clean trend. If you're in this trade, then by all means you can stick with it. Trail a stop, moving average, use a trend line. We're still heading up here. Bigger picture, still want to see us above 117. So as long as we're below 117, I do want to be cautious here in TLT, but you could be cautiously optimistic as this trend moves. MACD has moved into positive territory. If we go to oil here, this has continued to get crushed now, even on this Friday here on the holiday shortened week day. Still getting sold off, down 10% now this week. So really starting to see more acceleration to the downside. Didn't take out last week's volume highs, but we're down here on the USO ETF for a day and a half of trading. 10% to the downside. This now makes this pullback, this drop, whatever you want to call it, a little over 34% from high to low here, and it's pretty much in a straight line. So there's no help here for USO, continues to slide lower. If we zoom out all the way, looking at the USO ETF, this $10.30 level, which is way back here from late mid 2017, that could play a part there, but I'd really want to be looking at the spot futures contract to pay attention to those levels a little bit closer. Natural gas here, on the other hand, did close up on the week 2.68%, trying to hold tough. It's had this epic run over the past 3-4 weeks of trading, and you can see it is starting now to consolidate a little bit, mostly through time. As this starts to tighten up, you almost have this little kind of triangle here forming, higher lows, higher highs still forming, and it'll be interesting to see which way this pinch leads to next week. We still have our position here. Our stop continues to trail pretty aggressively as it's seen such an epic move here in short order, so we don't have a tremendous amount of room at this point between where price is and where our stop is, but we'll see if we can get a squeeze and see this trend continue. MACD still pretty resilient there, trading at highs. Finally, if we look at metals, we'll go to gold first. Pretty much flat on the week, didn't change a whole lot, still holding above this 115 area. That's where I want to see it continue to hold to remain optimistic there in the short term. And for silver, still comfortably moving sideways in this channel between $13.10 and call it $14. Now let's jump into and take a look at some of those sectors there that we highlighted at the top of the video. We have utilities, so again, flat here. Not much else to say about it though. Still below this resistance area at 50, 55 and change. Continue to say that individual REITs here do look better than the XLU ETF outright, so do look under the hood there. IBB, so here, surprisingly, this was in the number 2 spot here. This is very much risk assets. This is biotech, market cap weighted biotech for the most part, bigger cap companies in here. And you can see it's back down to this 101 level. This is a very big, important level for IBB. It's tested it a gazillion times over the past past year or so. If this starts to give way, then watch out below or look for that quick momentum. Maybe there's a fake out. Maybe there's a quick stop run under 101. It's very telegraphed, very clean support here. So I would expect maybe some games, maybe some stop runs, but either way, below 101, below 100, you got to be cautious there. You got to respect that price action. So far, we're above it, so let's see if that continues into next week. Healthcare, number 3, rounding out the top, still down 1.62% on the week, but clearly, trying to hold up more around this 40-50% retrace. We're not right back to the lows made at the end of October. We're trying to hold up, trying to put some structure and some higher lows in around this $89 area. That's constructive. If we start to, if we continue to hold that $89 area, and then we can break the short-term downtrend line to the upside, may get a nice little quick reversal trade there for next week. On the downside, XLK, this has got crushed here this week, down 6% on the week. You can see it is taking out the lows very clearly from the end of October, and we're back to the beginning of the year. We found a lot of structure, a lot of support come in here in April around the $63 area. Let's see if the bulls can do it again. Very sloppy chart. I'd want to be careful there. Semiconductors also pretty much back to testing the late October lows here, still above them. There's still that positive divergence, so it's going to be an important area to hold. Lots of overhead supply in here, so very ugly chart. Tough to get too excited, but if it can reverse here around this $87 area, then if you're tactical, you may find some opportunity. Finally, XLY here, third worst performing sector, minus 4.5% this week, back to retesting, sort of undercutting the late October lows here. So once again, this one looks a pretty, just pretty rough shape, all things considered. Bigger support down here around $97. It's trying to contend with these lows right here. So once again, you're going to want to see a quick snapback. Otherwise, sellers just continue to dominate. So that is the market recap for the weekend. Lots of sloppy charts out there. Things are going to either need time. There will be volatility. That VIX is still holding. I forgot to talk about that at the beginning of the video. Still holding above 20. So got to respect the overnight risks out there and the increased ranges. There's going to be some moves to the upside, but for now, bears are dominating short to intermediate term trends. So that is it. That is all I got for this week and the video. Thanks so much as always for tuning in and watching. We'll be back next week, Tuesday and Friday for the market recap video. Thanks so much. Have a great rest of your holiday weekend.